let's take the imperialism thread and talk about how that this is going to affect and is affecting the so-called developing world. And then we'll talk about the global bailout we need, because that's the title of this conversation. So we'll hit that at some point. So there's obviously very big differences in responses here. In Brazil, there's a whole political crisis around Bolsonaro basically rejecting that they're even in a crisis, and President Lula and others sort of counter programming. In South Africa, the ANC is actually getting a lot of credit for taking this extremely seriously and being proactive and delivering some resources to working people. But there's also been, and we see this even frankly in the United States, a lot of empowerment of some real policing brutality. So that's something to note. And then in India has gone from sort of, we're a miracle, it's gonna it will pass us by, to one of the most extreme lockdowns in the world. So there are these really, I just say this to note that there's obviously big geographic, economic, and ideological differences. However, there is the similar dynamic of what you were talking about before in terms of where wealth actually, how it gets accumulated, and then where it actually goes. And then the whole next idea of the consolidation of those dynamics around this crisis. So can you talk specifically about that?
Yeah, absolutely. I think I just wanted to pick up briefly on that point you made about South Africa, because I think it's been interesting to see how well many African countries, which really lack a lot of state capacity, have responded to this crisis. And that's at least partly because a lot of the new viruses viruses that have reemerged, medical crises that have emerged over the last several decades, have taken place in Africa and have killed a lot of people. And that has not become global news. It has not often been seen as important. Big pharmaceutical companies often haven't decided to develop drugs for those vaccines until it was, very, very late in the game. And I think that's at least partly why you've seen some sub-Saharan African countries respond to this really effectively, because they have experience, and they also know potentially that their healthcare systems are going to be put under a lot of strain if it is allowed to get to the situation that's happening in the US and the UK. I think the broader point is, as you mentioned, the relations of dependency that exist within the world system are structured by imperialism. So there's a bunch of poorer countries that are and will continue to be effectively dependent upon accumulation taking place in richer countries, even as they're told, if you just do X and Y and Z, you'll catch up with the rest of the world, right? So particularly, if you look at the very bottom of the global system in terms of wealth, is sub-Saharan Africa, formerly colonized by Europe and only released from that in the 1960s, unlike Latin America, which of course colonized earlier and released earlier. And which is at the very bottom of the global value chain in terms of production. So basically, raw materials, basic commodities that it produces and then exports, and that's how it develops some income. And there's this myth that sub-Saharan Africa will develop in exactly the same way as Britain developed, as the first capitalist country. First, it produced, food, and then it went on to produce manufactured goods, and then it went on to produce services. This is the kind of modernization theory myth. Of course, Britain did that at a time when the rest of the world had not really, discovered, as it were, capitalism, where capitalism hadn't been enforced upon the rest of the world. And of course, imperialism is what partly did that job. Whereas today, if you're a sub-Saharan African country exporting commodities, in fact, if you are any core commodity exporting country, you will find that there are a host of structural impediments that prevent you from industrializing. So firstly, there's like the terms of trade. There's the fact that often the things that you're selling aren't going to allow you to buy the things that you need, the capital goods that you need in order to industrialize. There are all the shocks associated with movements in exchange rates, which often create crises in these economies. There is the fact that as a government, if you want to try and do some of the spending, you have to borrow from investors, largely in the global north, who will often charge you quite high interest rates and then leave as soon as there's any sign of trouble, which we'll come back to later. There's the fact that the intellectual property that would allow some of these countries to develop is all owned and monopolized by companies in the global north. And there's the fact that actually even, the basis of investment that does exist in these economies, the capital that is accumulated there, is basically stashed in tax havens, owned and controlled by Wall Street or the City of London, and therefore can't be used for domestic development. So there are all these traps that are preventing these countries from industrializing. And that is to do with, as I said, the kind of relations of imperialism that exists within the global economy, the fact that the states to kind of industrialize initially retain a position of power in the global economy relative to those that haven't. And that's obviously at the moment, the global hegemon is the US, where you have most of the world's largest corporations headquartered, where a huge amount of intellectual property exists, where, you have the dollar being the center of the international system, as in you find many of these other countries, they have to borrow in dollars if they want to be able to, get access to investment. These relationships of imperialism have prevented these countries from developing for a very, very long time. The exceptions, of course, have been those countries that have gone around the rules imposed on them by the US and others. So China, Southeast Asia, where the state played a very, very active role in pushing towards a different kind of economic model. So, those countries that have been able to kind of escape that trap are those that have ignored all the rules that the IMF and others impose upon the developing world and say, open up your economy, privatize everything, cut public spending, etc. But the dynamics that we're really seeing emerge today, the crisis that is happening for the global south again today, is another debt crisis. And the dynamics of this are similar to those that took place in the 1970s. So in the kind of post-war period, you had capital flowing into the global south because, it was often, partly that was state aid, partly that was investors thinking that they'd be able to earn a high return in those places. And interest rates were not low by today's standards, but relatively low. So investors were kind of pushed into those higher return economies. When interest rates went up really high in the 1980s, that capital flooded back into the global north. And of course, a lot of that capital was being used for investment in infrastructure, in all these sorts of things that couldn't just be sold so that the debt could be repaid. And you had the emergence of these debt crises. Today, what we've seen is that over the last 10 years, interest rates have been very, very low in the global north. And there's broadly been this phenomenon of investors kind of reaching for yield, which basically means they can't find the returns that they need. So they're going out in search of all different sorts of risky things that they can do in order to generate the returns that they want. And one of those things has been lending to governments in the global south, also just investing in various different projects in the global south. The issue is that, so we haven't seen obviously a big hike in interest rates, but what we have seen is this big crisis. And when investors get scared because there's a crisis, they pile into the dollar. So generally, in a crisis, it's very difficult to imagine that the crisis is going to end when the prices of assets are going to stop falling, when you're going to be able to access credit again. So as a result, investors tend to sell everything and just pile into things they consider safe. Sometimes that's gold, sometimes it's just domestic currency, but a lot of the time it's the dollar, because the dollar is the safest, really, asset because it is backed up by the world's largest imperial power, which can enforce its will. So you get an outflow of capital from the global south and into particularly the US, which means that governments are finding it very, very difficult to access the capital that they need to maintain their debt repayments, basically. This means interest rates go up because there's, the supply and demand is out of sync. There's more bonds available because investors don't want them, but there's less demand because investors all want dollars, which pushes interest rates up, which makes debt servicing more expensive. That means that in a crisis where governments are having to spend more in order to provide basic health services for their citizens, those governments in the global south are having to spend more repaying debts to private creditors often than they are on public health. And there's some really interesting research that's come out today from the Jubilee Debt Campaign, which is at Drop the Debt on Twitter, that's shown that there are a bunch of countries, mainly in sub-Saharan Africa, that are spending more on debt repayments to private investors than they are public health in their own economies, which is absolutely just completely unacceptable. And, we've already seen Argentina is heading towards another default. There are potentially a bunch of other economies that are going down the same route. And unless there is some sort of write down, so unless the people who've lent to these countries are forced to take a hit, there's going to be a humanitarian catastrophe in these places. So, I think at the moment this is one of the things that's being largely ignored, but it's really, really important to kind of put on the agenda. Is this mounting debt crisis that could, A, yes, cause a humanitarian catastrophe, but B, also create really severe economic damage. You only have to think about the role that these countries play in global supply chains in terms of producing basic food to think about what an economic crisis in those countries would do to the rest of the world. So, yeah, this is a big problem, and it's something that we should all be looking into and taking seriously.
So, Grace, can you connect some threads for us? Like, if you're designing a global bailout or a global plan, is the thread, amongst other things, go any direction you want to go in the last couple of minutes, obviously, but it's like, what element is there that connects that we need to wipe out debt that you just described in developing world? We need to wipe out medical debt in the United States. We need to significantly wipe out just consumer debt across the board. Is there a part of this that could really be simplified if we did have some type of consumer to international jubilee?
Yeah, I think, the principle for any global bailout or, domestic bailout or whatever that I would say is most central is that it should take power away from those who own all the stuff and give it to people who work for a living. So that principle of redistributing power from those who have too much to those who don't have enough is really, really central. That means thinking about this not just in terms of wealth and income transfers, but yes, in terms of debt, in terms of employment, in terms of all these different things that shape whether or not we're able to, how we conceive of our own political situation as well as our economic situation. And that brings together a couple of different things. So firstly, there is the immediate problem of all this debt, right? So incomes everywhere are constrained because of what's going on. That means a lot of people, a lot of states, a lot of businesses can't pay their debt. When we're thinking about how to deal with that, again, bring back in this question of power. So states in the global south need to be able to provide basic health care for their citizens. Some of that debt needs to be written off. Like, they should not be prioritizing paying back powerful, wealthy investors over providing for some of the most marginalized people literally in the world. So that really should provide the basis for a plan. It's happened before, actually, in the early 2000s, a plan to significantly write down a lot of the debt that is owed to private investors by the countries in the global south. Then there is the question of private debt held by households in the global north. So that could be mortgage debt, it could be credit card debt, whatever. And a lot of that, particularly unsecured debt, so debt not backed up by an asset like a house, is concentrated amongst some very, very poor households at very high interest rates. So a lot of people have debt that they basically can't pay back because they're not earning enough to pay back the interest, let alone the amount that they originally borrowed. And there has been a strong case for a very long time to, again, write a lot of that off. Some of it just cannot be paid back. Like, people are not earning enough to literally feed themselves and repay their debts. It needs to be written off. For other people, the pausing of mortgage payments, that's good. That's going to help. I don't think that should be written off because you're giving people, a small number of people, free houses if you were just to write all the mortgage debt off. But pausing it seems like a good idea if it's combined with measures to make sure that tenants are also not being forced to pay out at the same time. Then I think there is this question of corporate debt, which is probably the biggest one because that's the one that the governments are most worried about, and it's where most of the money is going in terms of the bailouts at the moment. And what you're seeing is two different strategies. So firstly, providing liquidity, which is basically short-term loans to businesses to let them get through the crisis. And the second thing, which we haven't seen much of yet, but we'll probably start seeing in the future, is nationalizing these companies. So providing actual bailouts where the state buys a chunk of the company in order to stop it going under. This is what happened in the UK in the financial crisis. There was an initial question as to whether or not the banks were illiquid, so they couldn't access cash, or insolvent, so bankrupt. Eventually, after trying to provide them with loads and loads of loans, the central banks around the world realized that these banks were not just illiquid, i.e. they didn't just need more cash, they were insolvent, i.e. they were bankrupt. When that was realized, the state was like, right, we're going to have to buy up these banks and bail them out. And I think we will start seeing pressure for big corporate bailouts. And when that happens, I think firstly, it's very important to make sure that small businesses, as I said, are getting access to the credit that they need to be able to survive this, and potentially grants as well as just loans, because they've already got quite a lot of debt anyway. When it comes to bailouts, you are going to see pressure for very, very big companies to get corporate bailouts. And if that is not accompanied by conditions, then it's just going to be like the financial crisis all over again, where a tiny elite basically gets saved from the consequences of their own actions and everyone else pays the price. So I think we really need to be demanding that any bailout that does take place is done for the public good, rather than just basically saving the interests of capitalists. And that means things like, making sure that these firms keep on workers, making sure they're not paying out huge dividends to shareholders, making sure that they are adopting high environmental standards, all of these sorts of things. And actually, those companies which are owned by the state can then provide the basis for the post-crisis recovery, because the state can start channeling funds through these businesses, getting them to employ people again, getting them to invest, which can help to kickstart the economy on the other side and be actually part of a Green New Deal, which we're going to need after this is done to rebuild the economy when the actual crisis is over.
Grace Blakeley, awesome. I really, really appreciate your time. Everybody check out Grace's work. We'll have links. Hopefully we'll do this again. Thanks a lot, Grace.
Thanks for having me.
Stay safe.
You too.
All right. Thanks, everybody. You just watched a Michael Brooks Show video. Subscribe to get them all. Why wouldn't you? Don't be foolish. Click subscribe below and become a patron as well. Patreon.com/TMBS. Thanks, everybody.